Some good news came from Treasury this summer. The announcement of the Making Homes Affordable programs, or better yet known as the Obama programs, have been extended until December 31st of 2015. These programs include the Making Homes Affordable HAMP program, HAFA program, HARP program, unemployment program, and the Principal Reduction Alternative program. Now there's many other programs out there that exist other than the Making Homes or Obama programs. However, these programs were implemented back in 2008. Now, when Wall Street practically collapsed and the federal government came and swooped in, bailed them all out, they came up with these umbrella programs. Now, they realized that without providing the banks with some sort of incentivized program or basically compensation, they're not going to go ahead and save the American homeowners. So it's important you understand how these work. Every time you apply for a modification, you get pre-qualified, get approved, and consecutively after make a payment for the first, second, third, fourth, and fifth year. The federal government sends the lender, or I should say the servicing agent, not necessarily the investor, a stipend payment. Now these payments average around $1,600 per loan. But if we take the 2.2 million borrowers that receive some form of HAMP modification assistance, multiply that times the $1,600, we're talking that the federal government has paid out around $3.2 billion to the world's largest banks. Now, the unfortunate part of this, though, is regardless of approval or not, the compensation is still there. So this is the important part of this entire video that you should realize, is that prior to going into this, you should already understand that it's incredibly profitable for the world's largest servicing agents out there, Wells Fargo, Bank of America, Ocwen Loan Servicing. You should understand how the programs work, what programs your loan specifically qualifies for. In FHA, VA, USDA, Fannie Mae, Freddie Mac, conventional, all of these loans may qualify for something different than what your loan specifically qualifies for. Know how the programs work, know what type of program you qualify for, and then specifically know what your income, your assets, your liabilities, your expenses need to be in order to get you through to that program. Otherwise, you'll continue to go round and round and around, and unfortunately, maybe not obtain results. Now, regardless if you have the inner workings and the understanding of how the programs work, just because you have the income, the assets, the liabilities, and the expenses to meet those guidelines, still doesn't mean you will qualify. The program and modifications are guidelines. They are not law. The mortgage servicing agent or the mortgage company does not have to provide you this modification or this form of assistance. Remember, guidelines, not law. But if you follow this criteria and you understand how the actual process works, your chances of approval skyrocketed opposed to where you might be today. Remember, it's very profitable for them, and it's very unfortunate for us. But if we have the education behind it, then we'll have that much of a larger chance of approval. If I can be of help, or if United Financial Counsel can be of any help, please never hesitate to contact us. Thank you.